America's quintessential mall retailer Claire's has filed for bankruptcy. Again. Claire's, which is known for its endless aisles of accessories and having pierced over 100 million ears, first filed for bankruptcy in 2018. That was because it couldn't repay the $1.9 billion it owed at the time. And after years of trying to turn around its business, it's been met with the same fate, yet again.
You're just not saying your tweens and teens looking to storefronts to see what the trends are. They're looking online, and Claire's just hasn't been able to keep up with that online presence.
So how did shopping mall favorite Claire's go from a publicly traded company to multiple bankruptcies? And what's in store for the retailer going forward? To get a sense of what Claire's is like nowadays, my colleague Natalie and I visited one of the stores in Manhattan. She likes piercings and offered to get one for the story.
Toma.
So I just got my ear pierced at Claire's, and it was super nostalgic to be in there. It's not the same as it was in middle school, where it was fun and catchy, and there were lots of people in there.
Claire's is one of those brands with real emotional heritage. So it grew rapidly through the 80s and 90s and became sort of the undisputed leader in teen accessories, with thousands of stores worldwide, and incredibly strong brand recognition. And in particular, its ear piercing service became a sort of rite of passage for many.
Its expansion took off in the early aughts. From fiscal 2000 to 2008, the company nearly doubled its sales and grew its store count by over 350 locations during the same time period. But its business has somewhat of a wild backstory. Claire's was publicly traded from 1985 to 2007, when it got delisted from the New York Stock Exchange. It was sold to private equity firm Apollo Management for $3.1 billion. Claire's filed an application to go public again in 2013. After 4 years of trying to drum up investor interest, it ultimately backed out of the IPO process in 2017. A year later, the company filed for its first bankruptcy. It was taken over by creditors Elliott Management Corporation and Monarch Alternative Capital, who eliminated about $1.5 billion in debt from its balance sheet. Since then, it has continued to struggle. High costs related to US tariffs and competition from ultra-cheap online marketplaces like Shein, Temu, and TikTok Shop have all contributed to its demise.
Claire's relies on fundamentally a low-margin, high-volume model, so that kind of really, from a cost perspective, is hugely difficult to deal with. Then you have the factor that, in reality, Claire's still has too many stores for today's retail world. They have too many stores in locations where footfall is not particularly strong.
Going into bankruptcy, Claire's had more than 2,500 company-owned and franchised stores worldwide.
Were you expecting the chair to be right in front of the door like that? That's the first time I've ever been in a Claire's store, and I couldn't believe you were just like right in front of the window.
I'd forgotten that was part of the experience. You see other people getting their ear pierced, and you want to get your ears pierced.
Claire's still has strong brand awareness and generated $1.3 billion in revenue in 2024. That's about the same revenue it was bringing in 20 years ago. The problem is its profitability has fallen sharply. The company filed yet again to go public in 2021, but withdrew that application in 2023.
I wouldn't say it's necessarily the things we're looking up. It's more the fact that they're looking at various different measures to get the investment they need to turn around the business. So they have tried to explore all the different options needed to kind of raise the capital to modernize the business, to invest in the stores, invest in digital.
According to a preliminary SEC filing related to its IPO application for fiscal 2021, Claire's net sales were about $1.4 billion, but its net income was just $8.2 million. For comparison, in fiscal 2007, its net sales were about $1.5 billion, and its net income was $188 million.
If you've got stagnant growth, but your costs are obviously increasing by more than your revenue growth, then your margins are becoming thinner and thinner. And that makes operating stores or investing in things like digital transformation that retailers need to do now to kind of stay relevant and stay agile.
Claire's piercing business has helped to justify its large store footprint, but it's not been enough.
It makes them unique. However, how many times does your tween get their ears pierced? Generally, it's once. So you're going there one time, you're going to shop for earrings, get your 50% off when you get your ears pierced, and then you might not ever be going back. So I'm not sure how viable that is to sort of keep the whole brand open, but it is certainly a differentiator for them.
Despite turnaround efforts with retail partnerships, a loyalty program, and investments in influencer-led content, the company filed for bankruptcy again on August 6th, 2025. Claire's isn't necessarily done, at least not yet. This bankruptcy wipes clean a nearly $500 million debt balance that was due in December of 2026. Its struggles to pay that loan became clear in May of 2025 when it had to defer interest payments. Without that burden on its balance sheet, Claire's will have to leverage its strong brand recognition and tap into the next generation of shoppers if it wants to survive.
Reaching out to the parents of Gen Alpha and kind of offering some kind of reminder that they had that rite of passage with the ear piercings and the accessories. They had that kind of, they're tapping into that shopping mall culture, that nostalgia, the retro element is something I think actually does hold value and something that potential investors will look at and consider in terms of they are to come in and rescue the brand.
Bankruptcy can be a beneficial process for a distressed retailer that has a viable business going forward, where it can allow them to refocus, reduce some of their debt, reduce that store footprint, and emerge leaner and better than ever.
Claire's is liquidating its stores and, in the meantime, searching for a buyer. In its bankruptcy declaration, the company said it has contacted over 150 potential buyers and is continuing to negotiate. However, finding a buyer has proven difficult for companies that file for bankruptcy more than once. Claire's joins a roster of 9 other major retailers that have filed for bankruptcy at least twice within the past 10 years.
What we're typically seeing in the last year are these repeat filers, is that they are just liquidating and closing down their stores, maybe with some online presence continuing. But the second and really the third bankruptcy filing we've just seen as the nail in the coffin for the retailer and retail locations remaining open.